Chapter 10, Payroll Taxes. Learning Objective 1, Payroll and Form 1040. As we have seen before, the system that we use in the United States is not a collection on tax day on April 15th, but rather a pay-as-you-go system to where taxes are collected throughout the year, and the tax day is just used to kind of settle up as a reconciliation of sorts with that Form 1040 to determine whether tax is still due or a refund is warranted to the taxpayer. So let's go ahead and take a look at our first concept check here. Concept check 1, the payroll tax withholding system was established to produce a stream of revenue for governmental operations. That is true. Concept check 2, Forms W-2 and 1040 are forms used to match tax liability with tax payments. That is true. And again, that matching of the tax liability and tax payments will also yield either a tax amount due or a tax refund is warranted to the taxpayer to return that money to them. Learning Objective 2, Federal Tax Calculations. Withholding taxes are going to be determined in part by the employee's contribution. So they're going to complete a Form W-4. Now this W-4 isn't going to give the employee total discretion in terms of how much withholding to be able to provide. There's going to be essentially bumpers kind of on it, and they have choices to make as they go through that form. But they're going to have some control to be able to determine whether or not they want to be fairly conservative and have a lot of taxes withheld to virtually assure a refund at the end of the year and that there are no surprises, as it were, or whether they want to complete it to try to get as close to the actual tax amount due as possible to keep that money in their pocket throughout the year, but possibly having a tax due once they complete their 1040 and file that. Similar to what we had seen in previous chapters, using the appendices for the tax tables and percentage method. For withholding methods, we've got two of those as well. So we have a percentage method and a wage bracket method. And then along with the withholding that's being done for the federal taxes, we've also got Social Security and Medicare taxes that are going to get withheld on behalf of the employee by the employer. The Social Security or OASDIA under FICA is going to withhold Social Security up to $132,900 of their wages, in an amount of 6.2% of those wages. And then that is going to get matched by a payroll tax in the same amount. So the total taxes that are going to get paid to the federal government for Social Security is going to be 12.4%, up to $132,900 of that employee's wages. 6.2% is going to be withheld on behalf of the withheld from the employee and paid on behalf of the employee, and then the other 6.2% is going to be paid by the employer. Similarly, Medicare, or what's listed here as hospital insurance under FICA, is going to be paid, and there's no limit on the amount of wages that this is collected on, but 2.9% is going to be the aggregate amount, 1.45% is going to be withheld from the employee and paid on behalf of the employee, and 1.45% is going to be as part of that payroll tax. Additionally, from the Affordable Care Act, there's an additional 0.9% for Medicare for wages in excess of $200,000, and that will be withheld from the employee, paid on behalf of the employee, but there's no matching payroll tax for that amount. In addition to wages and salaries, employees are also required to report tips, and along the course of the year, they will also be required to report those to their employer by the 10th of the month. The month that they are reporting on when they make that report is going to be for the previous month. So by March 10th, an employee will be required to report February tips, and they'll do this using the Form 4070. Now, in addition to having to report those tips to their employer so that those can be determined, the federal government's also going to state that we're going to have tipped employees. If you're not reporting those tips into an amount of at least 8%, you're going to get assessed an 8% of gross receipts for the amount of tips. And if you've ever heard kind of like your friends talking, if you go out to the restaurants and you don't tip your waiter or waitress at least 8% or 10%, that you're causing your waiter or waitress to lose money. This is why, to where even if they don't get a tip of that amount, the federal government is going to treat them as if they had. So they're going to, if they report no tips, it's going to be treated as if they had earned 8% tips on those gross receipts. And the reason why is to deter underreporting. So let's take a look at our first concept check for this learning objective. Withholding and other employment taxes are levied only on cash wages and or salaries paid to the employee. That is false. Concept check 2 here. The employer fills out Form W-4 to determine how many withholding allowances the employee is entitled to take. That is also false. It's going to be the employee that completes that W-4 and submits it to determine, to some extent, the amount of withholding that they want through that course within those bumpers. Learning objective 3. Jim is single and earns $600 per week. He claimed 2 allowances on his W-4 form provided to the employer. What amount of federal withholding tax will be deducted from his gross compensation? And here we have 2 amounts that are listed, $40 using the wage bracket method and $40.11 using the percentage method. And what I'd point out here is if you think back to those appendices where we looked, to where if we use the percentages for assessing tax liability, we'd get a precise number, and then when we use those tables, we get kind of an approximation. We get a similar thing here to where we've got $40.11 using the percentage method, but if you round that off to $40, you're going to see that we get that with the wage bracket method. Learning objective 4. Ginny earns $140,500 in 2019. How much Social Security tax will be withheld from her compensation? How much Medicare taxes will be withheld from her compensation? So Social Security is going to be withheld at 6.2%, but only up to $132,900. So if we take $132,900 times 6.2%, we'll get $8,239.80. And for the Medicare taxes, there's no limit. So we'll take $140,500, the total amount she earned, and multiply that by 1.45%, and we'll get $2,037.25. Learning objective 5, Form 4070 is completed by tipped employees for any and all tips earned for the period. And that is going to be false. Once they complete that 4070 and submit it, they're completing it for not the current period, but for the prior period. Learning objective 3, reporting and paying payroll taxes. So here for employers making payroll taxes and their deposits, to determine the timing of those, we're going to do something called a look back. So we're going to look back 4 quarters in the prior, and if they have $50,000 or less in tax liability, they can be a monthly reporter and make those deposits on a monthly basis. If there's more than $50,000 in tax liability, though, they'll have to do semi-weekly or twice a week for those deposits. So if you are semi-weekly, you're going to be making those deposits on a Wednesday and a Friday. So Wednesday's deposit would be associated with payroll paid on Wednesday, Thursday, Friday. You're going to be due on the following Wednesday. And then Saturday, Sunday, Monday, and Tuesday will be due on the following Friday. And they're going to do that through an electronic funds transfer. So now, even though you might be a monthly depositor, if you accumulate $100,000 or more in taxes that are going to be due, then you're going to have to make that deposit. And then secondarily, if you are a monthly depositor, you're going to convert to a semi-weekly for the remainder of the calendar year if you accumulate that much in taxes that are going to be due. And then we've got our Form 941, which is going to be a reconciliation of the payroll tax liability and the payments made to cover that liability. And that's going to be due the month following the close of the quarter. If there's tax liability less than $2,500, then the amount can be paid when the Form 941 is filed. And you're going to use a 944 if it's for smaller employers. So Let's take a look at our first concept check for this learning objective. All new employers must use the semi-weekly schedule deposit system. That's going to be false. Some employers can use that 50,000, if you're 50,000 or less, can use that monthly deposit. But again, if you accumulate 100,000 in that period, you might get converted to semi-weekly, or if you're over the 50,000, then you might get converted to a semi-weekly for your semi-weekly schedule for the deposits. Learning objective 2. The deposit schedule for an employer is based on the total tax liability that the employer reported on Form 941 during the prior 4 quarters starting on July 1 and ending on June 30th of the next year. That is true. Learning objective 3. Semi-weekly schedule depositors remit taxes on the following Wednesday if the payroll tax is paid on Wednesday, Thursday, or Friday. That is true. The penalty for not paying the appropriate federal tax on time is based on the total amount of the tax liability and whether or not a partial payment was made on time, and that is going to be false. Learning object or concept check 5. Form 941 is prepared by the employer to record all federal taxes withheld, including federal withholding, Social Security, Medicare taxes, and amounts paid for these taxes. That is going to be true. Learning objective 4, self-employment taxes. Now, the self-employment taxes are based on those net earnings in excess of $400 generated by a sole proprietor. For 2019, we've got our Schedule SE, which is used to determine the AGI deductions, but the amount of that self-employment tax that the taxpayer is going to be responsible for is 15.3%. So that's going to be the 12.4% for Social Security and 2.9% for Medicare. So you'll note that this is both the employee withholding portion of Social Security and the payroll tax portion, as well as the employee withholding portion for Medicare and the payroll tax portion. So there's also going to be a federal unemployment tax, and that's going to be 6% for wages up to $7,000. And that there's a maximum credit for state employment taxes of 5.4%. So essentially what this is going to have the effect of doing is state unemployment taxes are going to be 5.4% up to $7,000, and federal taxes are going to be 0.6% up to $7,000. Now, if states want to collect an amount less than 5.4%, they're entitled to do that. However, the balance would be pulled into the federal tax. So by and large, states are going to assess 5.4% unemployment taxes, and then the federal government will get the balance of 0.6% up to $7,000, similar to what we saw in Social Security, of the $132,900 being the limit on the wages. Here, $7,000 is going to be that limit on the wages. And the Form 940 is going to be filed annually by the employer to report and reconcile these Federal Unemployment Tax Act liabilities and payments. So household workers are going to be considered employees subject to federal income, FICA, as well as these unemployment taxes if. And then we've got 3 conditions that have to be met. They paid wages of $2,100 or more in 2019. Federal withholding taxes were withheld from these workers, or workers in the were of at least $1,000. Wages of at least $1,000 were paid to all of the household workers in any given quarter in the prior 2 years, in 2018 or 2019. So if you have one of these, you can file your Schedule H. But if you have all 3 of those, then you're gonna have to do this. And the Schedule H is going to be completed by the employer taxpayer and submitted along with that 1040. So let's take a look at our concept check. Self-employed taxpayer is treated both as an employee and employer, thus pays a combined total of 15.3% for FICA tax. That is true, and it's going to be 12.4% for Social Security, 2.9% for Medicare. Concept check 2. What is the effective tax rate of the Federal Unemployment Tax Act provided employers pay into their state programs on a timely basis? And the answer here is going to be A, 0.6%. So the federal tax is going to be 6% minus 5.4% for the state, leaving us 0.6%. Concept check 3, who can use Schedule H? So this is going to be individuals who employ household workers and pay wages of $2,100 or more, or those who pay $1,000 to all workers combined in any of those prior 2 years. Concept check 4, taxpayers who employ household workers are subject to payroll taxes under what conditions? When do we have to do this? And then it's you pay one household employee wages of $2,100 or more. Federal income tax are withheld from employee wages, and household wages of at least $1,000 were paid to all workers combined in any calendar quarter in 2018 or 2019. Learning objective 5, forms W2 and W3. So W2s are going to be the summary of an individual employee's earnings and wages, and are going to be due to those employees by January 31st of the following year. So for tax year 2019, those were due January 31st of 2020. And copy A is going to get remitted to the Social Security Administration by that same time frame. In addition to employers reporting the wages of each individual employee, they also will file a Form W3 as a transmittal form that's going to summarize all employees' W2s prepared by that company, and they're going to send it with copy A of all W2s. Now, if there's a mistake on it that would have to get corrected, a Form W2C would be the corrected form for a W2 that was initially incorrectly prepared, and a W3C is going to be for the corrections that would accompany copy A of the W2C for the Social Security Administration to make note to those recipients that a correction is being made on that form. So let's take a look at a concept check for this learning objective. So concept check 1, the employee uses the information from a W-2 to prepare his or her federal, state, and local, if applicable, tax returns, local being notable here in Missouri because of Kansas City and St. Louis. And this is going to be true. So learning objective 2, where and when must the employer send copy A of the W-2 form? And copy A is going to be sent to the Social Security Administration along with that form W-3, which is the transmittal form of the summary. And that's going to be due January 31st of 2020 for 2019 tax year. Learning objective 3, explain the process if an employer must correct an employee's W-2. An employer who must correct an employee's W-2 would file a W-2C and the W-3C as soon as possible. What are the maximum penalty amounts per return imposed on a company that prepares an incorrect W-2? The penalties range from $50 per return to $270 per return, and the maximum depending on the size of the business. Also a penalty of $550 per return for intentionally disregarding filing requirements with no maximum penalty associated with that. Learning objective 6, supplemental wage payments. Supplemental wage are going to be compensation in addition to those regular wages. And withholding can be calculated with one of two methods, either a flat tax of 22%, or it can be combined, or you can combine the supplemental payments with the regular wages and calculate what the withholding tax would be. So backup withholding of 24, backup withholding might come into play. An employer must withhold 24% of certain taxable payments to the payee if they fail to furnish a taxpayer identification number. And those payments could include interest, dividends, rents, royalties, commissions, and certain payments made in the course of a trade or business. So the linchpin that we're looking at here is that the employer is still going to have to withhold an amount, and that amount is 24% of those certain taxable payments if the payee fails to furnish the correct taxpayer identification number for the employee. A Form W-9 is prepared by the recipient and given to the requester. Failure to furnish a correct taxpayer identification number can result in a $50 penalty, and that's for a reasonable mistake. If there's intent behind it, if there's a penalty for willful neglect, for example, in completing the form, it's going to be $500. So if you should have known and are just ignoring that, or if you're intentionally failing to do this, then $500 can be the penalty associated with that. If it's just a mistake and gets missed, then $50 would be the penalty roughly. And then the form is going to be, the W-9 form is used to certify the taxpayer identification number is correct, and the taxpayer is not going to be subject to that backup withholding amount, and then to claim exemption from a backup withholding if the taxpayer is a U.S. exempt payee. And then estimated taxes are going to come into play if the amount of withholding is not going to be sufficient to get close enough to the tax liability that's going to be due on the tax day for the tax payments with the 1040. And this is done using a 1040 ES. And then those taxes are going to get paid. So estimated payments are going to be required. It's pay as you go, and you can't wait until April 15th to make those payments. If the unpaid tax liability is going to be greater than $1,000, that could come into play. So if you're within $1,000 of your liability, then no penalty is going to be assessed in that respect. You're going to get close enough. You'll still have the tax due of less than $1,000, but no additional penalties required. If you have greater than $1,000 liability, you need a safe harbor. You need to have some other way to say that a penalty is not going to be assessed. For example, being within 10% of last year's tax liability might be in that realm of a safe harbor, to where if you're withholding based on that. And then those estimated taxes, you're going to have 4 dates that those can be provided. April 15th, June 15th, September 15th, and January 15th of the next year. So if you're 2019, for the tax year, April 15th of 2019, June 15th of 2019, September 15th of 2019, and then January 15th of 2020 is when you can pay the estimated taxes, and then April 15th of 2020 would be the tax day for that tax year. Concept check 1. Describe 2 methods that are available to calculate the withholding from supplemental payments. You can withhold at a flat rate of 22%, and then alternatively, you can combine those payments together. So if taxes have already been withheld, add the 2 payments together, calculate the tax, and if one payment has already been made, then subtract it and find the difference and withhold the remaining taxes from the supplemental wages. Or if taxes have not already been withheld from regular wages, add the 2 amounts together and calculate the taxes if it was one payment. Concept check 2. Payments subject to backup withholdings are withheld at a flat tax rate of 24% if the payee fails to furnish the taxpayer with the correct tax identification number. That is true. Concept check 3. What is a Form W-9? And it's going to be used for U.S. persons, including resident aliens, to document their taxpayer identification number. This form must be on file with the payer. Concept check 4. What is the penalty for failing to furnish a correct tax identification number to a requester? It's going to be $50 for each failure. If it's reasonable to have done so, it's just kind of a mistake. So if it's due to reasonable cause, not willful neglect. If the taxpayer makes false statements with no reasonable basis, that results in backup withholding, or if there's an intent behind it, or if there is willful neglect in this process, then a penalty of up to $500 can be assessed. And there's also criminal penalties, including fines and imprisonment, that can come into play as well. Learning objective 5. Taxpayers use Form 1040 ES to remit additional amounts to the IRS so that they receive a refund when they file Form 1040. And that's going to be false. Those estimated payments are provided to comport with the pay-as-you-go system and to make sure that the taxpayer gets close enough to the actual tax liability due to give the federal government assurance that those tax payments are going to be made. So it's if you're too far away from the tax liability in terms of the amount, is when this may come into play to have the penalty. And you needed the safe harbor. Safe harbor may be getting reasonably close enough to where you thought the tax liability would be. So if you're within 10% of what you thought it would be, and you're looking at last year's information, including within that assessment, that may be something that can be kind of combined in for one of those safe harbors. But if you otherwise are within $1,000, that's going to satisfy that as well.